As we near the end of earnings season, we thought we'd share a few things that we've noticed in the data. We'll start here with sector performance and really positive versus negative surprises. So here in blue first, you see positive surprises. See a range from mid-50s to low to high 80s. Really, if you average these out over time, pretty typical levels that we've seen historically. So no big trends here. As you layer in negative surprises in white, averaging this out maybe slightly higher than history, but only by a point or two, so not a material trend or difference here that you would note. Do think it's worth noting the left-hand side here when you look at discretionary, staples, and energy, where those white bars and blue bars are closer together. Those may be indicating areas of our economy where there's stress, and maybe to look deeper into that as we move forward. It's also worth noting that all of this is pre-tariff impact. So they were announced or discussed, but the actual true impact of it was not in these numbers. So it's just worth noting as we move forward. So let's look at the market reactions. So 4 different areas here that we'll look at kind of relative to current and history. So first, beat earnings per share and sales. So these were companies that beat expectations, both EPS and sales. And what you're looking at here is excess performance. So on the day that they announced, what was the average performance over the S&P on that day? And you can see those that beat both, up about 70 basis points, 0.7%. But relative to history, typically you've gotten more, almost twice what we've seen in this period. So I think that's worth noting. And as we move to the right here, we see what happens if you miss. So if you miss, down 3.6, history says down 3.2. So we got less upside, but we also ended up with more downside if we missed. And we think that this is just one of those areas where expectations are just extremely high, even higher than those that are posted and produced and actually published. It's almost like we go back to the 90s with the whisper numbers, if you will, where there was a number that was posted, but everybody expected more or different than that. I just think that we're in one of those transition periods where markets have a lot of anxiety and they want to see even more maybe than what's fair of companies, but these are the kind of reactions that we're seeing. And that really leads us to our last note here, and this is forward guidance. So we're going to look year by year over the last 15, if you will. So this is annual guidance. So for the last section there on the right, this is 2025 full year earnings guidance. And we see total revised up first in blue, really a big fall off since 2021, to be honest. But the lowest number we've seen on this chart, matching the low in 2013. What's interesting is this next, which is white, total revised down. So highest number by far that we've seen. More than a third of companies have revised guidance down for this year in this most recent period. And that's a big number. And honestly, this is what we've said in a number of these segments. We've used the word uncertainty. So we've seen uncertainty impact inflation expectations. We've seen uncertainty impact confidence or surveys. We're now seeing it in earnings as well. And if you listen to the calls, you hear that word. We are not sure what is coming. We're pulling guidance altogether, or we're cutting guidance because we don't know that we have the visibility to continue with these plans. So we can take this a couple of ways. One, we saw the expectations or the performance versus expectations on the prior slide. So maybe pulling these back gives a little more headroom for companies to outperform if things do settle out a little bit. So that could be the positive case, if you will. The negative case is if this uncertainty continues, it is going to impact capital decisions of companies, which will impact long-term performance. So those are kind of the two sides of this coin. And we're giving you both and not a firm opinion because, to be honest, it's uncertain, right? There's that word again. But we do think this is something very important to watch and was one of the bigger things that we noticed in this season of earnings performance. So with that, thanks for joining us as always. Thanks for stopping by.